All right. Hey, everybody. Chris Dunn here, and I am really excited. Today on the show, I have Cullen Roche. Cullen, how you doing, man?
Good, Chris. How are you doing?
I'm doing great. I'm doing great. So, for anybody that doesn't know Cullen, he is the founder of Orcam Financial Group. I think I said that right. Isn't it Orcam?
Yeah.
Okay.
Yep.
Awesome.
Macro backward.
Okay. He's also the author of Pragmatic Capitalism, What Every Investor Needs to Know About Money and Finance, which is actually one of my favorite books about, just the basics of kind of the monetary policy and, the Fed and money. And there's a lot of myths that are being spread around, from a lot of the pundits and talking heads on TV. And Cullen is actually one of the few guys on TV that I really respect. And I just, I think he has a really interesting and pragmatic way to look at the market. So thanks for being here, Cullen.
Yeah, you bet. Thanks for having me, Chris.
Yeah, absolutely, man. Well, is there anything else? I know, you managed like a $500 million fund at Merrill, and you run your fund now, and you have a successful blog over at PragCap. Is there anything else that people should know about you?
No, I mean, I'll guess I'll kind of give you a brief background on how I sort of came to be, I guess, because I probably relate to a lot of your listeners because I'm not an academic economist and I'm not a policy maker or anything like that. I came into the business through Merrill Lynch on their wealth management side, just working as a financial advisor, and came into the business. Kind of got lucky working with a big team of guys and kind of got thrown into managing a big pool of assets right off the bat. And that eventually transitioned into me managing my own fund. And that was sort of an interesting experience because I come from everything from a market practitioner's perspective. So to me, I kind of probably have a lot of free market tendencies, as sort of the trader mentality, you eat what you kill sort of thinking. And so at the end of the day, to me, a lot of the stuff that economists talk about, and especially policymakers, it just wasn't that important to me to be politicizing a lot of this stuff. I just wanted to know how to make money from it, in essence. I wanted to understand, okay, let's get all of the behavioral biases out of this stuff and look at this from a sort of on the ground operational perspective and understand how things work. And if I can understand how things work, then I can make better decisions about what the potential probabilistic outcomes will be of various either policies or what's going on in the sort of macro economy. And 2008, 2009 was really the impetus for what drove so much of what I guess I'm now known for in terms of the monetary system and things like that. Because when the Fed got so involved in the monetary system and the economy, and we had the American Recovery Act and all these big policies that were implemented to sort of try to support the economic system, if you didn't know how all those policies impacted everything, I mean, you were dead in the water as a trader or an investor. And so I discovered fairly early on, I think, that how a lot of these policies work at sort of a ground level and really understanding the operational aspects of it. And that's, I guess, kind of how I came to be. So really from a market practitioner's perspective, not a policymaker or an academic economist, where I think a lot of people are really biased about their views.
Yeah, I mean, I think that's great. And I know everybody that watches my show is either a trader or an investor or looking for practical ways to really make money in the market. So that's why I appreciate all the work that you've done on your blog and in the book. What would you say if you had to like wrap up your beliefs about the markets or your approach in just a couple of sentences? I don't know if that's possible, but what would you, I guess, tell somebody, like a 15-second elevator pitch about what you do and what your beliefs are and how you approach the markets?
Well, so I'm really specific about the difference between investing and saving, as you probably know from the book. And the vast majority of people, probably 90% of people out there, are just savers. They are literally they're not true investors in the sense that like an entrepreneur is. And I'm very specific about the definitions of these words because I think it's really crucial to understand, how to actually apply the concepts. And investing is spending for future production. And this is something that generally entrepreneurs do. When you spend your capital on starting a firm and going out and actually building, say, a factory or a widget that goes into actually increasing future production. Whereas the securities that are issued to finance investment, they trade on secondary markets and are allocated as our savings. And so I like to be very specific with people that the vast majority of us are just allocating our savings. It's mom and pops who are really, they're trying to generally achieve two things. They're trying to protect themselves from the rate of inflation, and they're trying to protect themselves from the risk of permanent loss. And over time, that generally just means building a really diversified portfolio that is not necessarily a beat the market type portfolio, really minimizing friction, so maximizing your real return by reducing taxes and fees, and really keeping things fairly simple. Obviously, there's people who are more traders and along the lines of, I guess, what I would call more speculators. But in general, the vast majority of people are just savers who need to be allocating their savings prudently.
Yeah, and I completely agree with that. And it's a really interesting perspective because—
That was a little more than 15 seconds, huh?
Sorry, say it again.
That was a little more than 15 seconds, huh?
No, it's great. I mean, I think that a lot of people, if they start with the wrong perspective in mind, what they think they're doing, they're kind of putting themselves at a disadvantage from the start. So like people that are just savers in the markets, for example, and like you said, it's a lot of mom and pops 401ks that are just kind of allocating a retirement savings into the market. That's completely different from actually investing in the stock market. Like investing, my definition of that would be like startup capital or, funding an IPO or something to, like you said, I forget the technical definition, but basically for future production, right?
Yeah.
Yeah. And
exactly.
then—
No, that's dead right. Investments is basically the source for future production. In essence, it's something that enhances a business generally later. And we issue financial assets to finance that. And, so I make a pretty clear distinction between the way that those instruments are issued and the way that some people are true investors in the way that they finance and actually spend for future production, and the way that a lot of other people are really just allocators of savings, and they're doing something that is really very different than what the entrepreneur generally is doing.
Right. So a lot of pundits on TV right now are selling fear. It's like every day, and I don't watch CNBC every day, but every time that I do turn it on, there's usually somebody talking about why gold's going to go to 5,000 or why the dollar's doomed. And where nobody can really predict the future, what's your opinion on where the dollar's going to be? What, is gold a good investment? What's your perspective like on the Fed and a lot of the fear mongers? What kind of position do you take with that?
So much of it is just political bias. I think that people have an incentive to sell emotion and biases for some reason. And, the most common one in the financial markets is this message of fear. I think people are generally, a lot of it is just pundits and journalists who are trying to, I think, drum up attention. I mean, I know from my website, if I write something that is scary, if I were to write an article about, make some ridiculous prediction about the market crashing next month, I am certain if I put it together in a nice, neat packaged with cute little charts and everything, that it would probably drum up a huge amount of attention. But that's because it's an emotional reaction. People read something like that or they see something like that and they get scared and they're drawn to it. And the natural reaction is to sort of try to understand it so that you can sort of insulate yourself from it or protect yourself from it. And that's almost always the exact wrong response that people have, that they succumb to this really emotional bias in the markets. And I mean, 9 times out of 10, this ends up being just a sort of catastrophic reaction that people have to the markets, where they get fearful of something and then they react and then they do something that is detrimental to their portfolio. I mean, if I always tell people, if you don't know your risk profile before you get involved in a bad market environment, the market will teach you what your risk profile is. And the worst time to figure out what your risk profile is in a year like 2008, or when things actually get scary. So a lot of this is just a really biased emotional reaction to what generally is nonsense. If you're a true saver, you're someone who is really taking at least a somewhat long-term perspective of these things, you really shouldn't be involved in a portfolio that is going to be whiplashing you through years like 2008 to begin with. So there's a lot of it's just, I think, political bias and emotional bias that people succumb to.
Yeah. And I think there's also, I'm very skeptical as a trader, always looking for reasons why a stock is, overhyped or whatever. And whenever I look at somebody on TV that's trying to sell fear, usually there's an ulterior motive. Like a lot of the guys on TV that are pushing gold sell gold to retail investors. Isn't that convenient?
They're totally conflicted. There was a really popular video. I can't remember the name of the guy who made the video, but it was called something like Debunk, or the biggest scam in the world. And it was about how the Federal Reserve is this big scam that is printing money and is going to cause this inflation that's going to turn us into Zimbabwe or something. And the ultimate message was, and it was beautifully done. I mean, the whole video, I think, was something like 45 minutes, and it's edited, perfectly, and the production is really beautiful, and it's brought together. The message it sounds like it makes sense, and it's really enticing, and they really sell it. And at the end, the message ultimately is buy our gold and silver coins. And we just so happen to be the guys who will sell you those. Which drives me crazy when people like that are trying to sell you gold or silver or something, because ultimately what they're getting, what you're exchanging is, in essence, they're exchanging you dollars for gold. In essence, what they're doing is they're obtaining the exact thing that they're telling you that you shouldn't hold, that the dollar is going to crash and that you need to hold the gold. Well, if you believe so firmly in this, why are you selling the gold in exchange for the thing that you think is going to crash?
That's a really interesting way to look at that, man. And it's so true. It's a beautiful sales pitch, and it's a very convincing story for people that really don't understand the Fed. And even people that do understand the Fed, it's kind of convincing. Like, here's, they basically create this framework to show how money's created, and, bonds and all that. And for the typical person that isn't an economist or in finance, it's very easy to fall prey to that. So my question to you, Cullen, is, well, what's the other side of that argument? Like, what's the reality of the Fed? What's the reality of gold? Are we going to go into hyperinflation? Is gold going to 10,000 an ounce? And if so, why? If no, why not?
So, again, I go back to the sort of operational understanding of all of this. I work from really trying to understand the financial system for what it is, rather than trying to project some sort of political bias into all this. And when you look at what the Federal Reserve is, the Federal Reserve is basically just a big clearinghouse for the banking system. Okay, so what you have in our monetary system is you have the entire banking system, which is really it's just a big payment system. It's basically, think of it as sort of an electronic payment system, where we obtain electronic deposits and we shuffle those deposits around in the process of spending and whatnot. And those deposits almost exclusively or primarily come from the act of lending. So when a new loan is made, that creates a deposit by definition. If the bank were to issue a loan to Chris, and Chris were to deposit what would be his asset in that bank, the bank would in essence have both the asset and the liability side of the transaction there. And all they're doing when they create that loan is they're expanding their balance sheet from thin air, almost in the same way that a corporation does when they issue corporate stock or a corporate bond. Where does the bond come from? It doesn't come from anywhere. They just make it. It's an expansion of their balance sheet. And that's a concept that a lot of people don't fully understand, because the money that banks create essentially comes from thin air. It doesn't come from anything. It didn't come from reserves, or it didn't come from their capital necessarily. It's just an expansion of their balance sheet. And so,
right. And Cullen, sorry to interrupt. So that, you have this narrative where these guys say, well, the Fed is printing us into oblivion, and, we're going to go into hyperinflation because the Fed is printing and creating so much money. Is that the truth, or is there another side to that story?
well, so here's where the Fed fits into this. So think of it this way. So we have this big private banking system, and it's run in just a private competitive market where basically banks are competing for loans in essence. They're competing for our demand for their money, basically, so that they can charge basically an interest rate on the debt that they issue, basically. And the way that what the Fed really is the Fed is just a big central clearinghouse. Okay, so all the things that the Fed gets most of its attention for are really, in my view, not really the primary reason for the Fed's existence. The Fed's primary existence, the reason why the Fed was created after the panic of 1907, was because banks used to run a private interbank system, a private clearinghouse system. Okay, so what would happen is at the end of every day, JP Morgan and Bank of America would meet up at the big one in New York was called the New York Clearinghouse. And they would meet up at this clearinghouse and they would settle all of their interbank payments. So if there were customers that had payments between the two banks, they would settle up at the New York Clearinghouse, okay? Now, what happened repeatedly with these private clearinghouses, which was problematic, was that these banking panics would cause the clearinghouses to shut down at the times when they were actually most needed. So in years like 1907, when you had this huge banking panic, the clearinghouse would stop basically, and all payments would be stopped from clearing, because what would happen is JP Morgan would be afraid that Bank of America was no longer solvent. So JP Morgan would go to the clearinghouse at the end of the day and they'd say, we're not going to settle with you because we're worried if your liabilities are no good now. So this created a huge problem for the broader economy, because now Chris Dunn, who had no involvement in, let's say, a real estate crisis or anything, or taking on bad loans, now Chris can't settle his payment with anyone who does business with Bank of America, because Chris banks with JP Morgan, and JP Morgan just won't do business with Bank of America. So the economy,
so what you're saying essentially is that they're acting as a risk mitigator. Is that right?
Well, they're acting as their own risk mitigator, which is really it's a good thing. But banking is not like every other business, because the banks run our payment system. So, I could be involved in trying to settle payments in a year like 2008, 2009, and if my bank just won't clear with other banks, then I can't settle payments. I can't do my everyday work. And so that's why banks are really unusual, because they can have an impact on the broader economy in a way that almost no other entity can. I mean, if oil companies start to collapse and, fall apart, that's just going to drive, down the price of oil probably, and create different, competitive advantages for different firms. It's not going to stop the oil market from functioning. But when the banking system goes through a panic, the banking system can literally stop working, and you might not even be able to process a transaction to buy gasoline or to buy anything. And so what the Fed did, what the government did by creating the Federal Reserve, in essence, was they created really what is a government-run clearinghouse. And the thinking behind this was that by leveraging basically the the public and the aggregate assets of the entire monetary system and the entire economy, and the public, the government's access to be able to basically tax everyone. Well, what they were doing was they were creating a clearinghouse that wouldn't shut down necessarily inside of a big crisis. And we saw this in 2008. I mean, the Fed at its core worked exactly the way it was supposed to, because the Fed came in and the Fed supported the payment system at a time when the banks wouldn't support it on their own.
I think that's so powerful and almost funny that nobody really talks about that. When you hear about the Fed, everybody just likes to talk shit and say that they're the ones, printing all this money, when really the system did what it was supposed to do. And I guess what you're saying in a nutshell is the Fed isn't necessarily the one that's responsible for printing all this money. It's actually the banks that have more power. It's like all the eyeballs are on the Fed, but really it's the banks that through loan creation are the ones that are actually creating the money. Is that right?
Exactly. Yeah. The banks are the real money printers. The government really, and this is, I don't want to get too technical, but the government basically, I differentiate two different forms of money in the financial system. There's outside money and there's inside money. Inside money is made by the private sector, primarily by the banking system, and it's settled inside of the private banking system. Outside money is forms of money that facilitates the use of inside money. So the classic example of outside money is cash and coins. A lot of people think that the government literally prints this money. And I mean, technically they do literally print. The US Treasury, the Bureau of Engraving, they literally print.
Somebody's got to make it. Yeah.
Right. Somebody's got to make it. But what's interesting is that the way that money actually enters the financial system is, in essence, banks basically buy it from the government. And so what they're in a sort of weird way, what they're doing is, the way to think about this is that anyone who wants access to cash and coins first needs a deposit account. I mean, how do you withdraw money from an ATM? You have to have a deposit account. So you have to think of it in terms of the sequence of events. Did the actual physical cash come before the deposit? Or did the deposits necessarily come before the cash? And what happens when somebody draws down a bank account, basically, is what you're really doing is you're swapping your bank deposit for a physical form of cash. And what generally happens is that the physical form of cash then later gets redeposited back into the banking system. And so the real money for most of our transactions, even cash transactions, doesn't come from the government. It still comes from the private banking system. It's just that at times we can swap our inside money for outside money to facilitate transactions at certain places.
Well said. So I want to move on to Bitcoin. I feel like money is kind of like religion. Nobody can really agree on what true money is, right? Mm-hmm. Do you consider Bitcoin money? And if so, why? Or if no, why not?
Well, my definition of money is pretty plain. I just view money as anything that can serve as a medium of exchange. So, I mean, if I can take a roll of toilet paper and shove it in my wallet and go down to the sandwich shop next door and convince the guy selling sandwiches that my toilet paper is as valuable as the sandwiches he's making, that would serve as money technically. So, when you look across the spectrum of all financial assets and non-financial assets, lots of things meet the definition of a medium of exchange, which is what I think is the most important and crucial function of money. And the difference is that certain things meet this definition much better than other things do. So gold, for instance, a lot of people think that gold is money, and technically I would say they're right. I mean, you can take a piece of gold and you can walk into a lot of stores in the United States, and there are people who, will accept the gold in exchange for most goods and services, but the vast majority of them won't. You can't go into Walmart and use gold to buy your groceries or something. So gold is money, but it's not a very good form of money. And in the modern financial system, because everything works through the regulated banking system, it's the liabilities that banks issue as deposits that primarily function as money. And Bitcoin, it just doesn't have the same level of credibility that things like bank deposits do. So again, Bitcoin is a little bit like gold. It's definitely money. It's just not a very good form of money.
Well, and I agree with you on some points, but I disagree in the fact that I think that Bitcoin is, it's very easy to use, right? I mean, where gold, you know, you can't walk into Walmart and buy some stuff with it. With Bitcoin, it kind of adds a level of ease of use where you can transfer funds around the world instantaneously with no fees, right? So doesn't that definition kind of make Bitcoin a little more valuable in a sense?
Oh, I think that Bitcoin is definitely a better form of money than gold is. I mean, definitely much easier to transport, much easier to use. Potentially could be an important form of money, but I don't know. I'm a little bit skeptical of how much credibility Bitcoin can ever have, just because it doesn't have the support of a really strong legal system behind it. And that ultimately, to me, money, I mean, the word credit literally comes from the Latin word credere, meaning trust. And if you don't have trust in money, it's very hard to make it viable. And for all of its weaknesses in fiat money and whatnot, the one thing that a really sound fiat monetary system has is it's got generally a very supportive legal system behind it that will give people trust in utilizing it, knowing that, okay, if for some reason so-and-so is no good on their payment, or if there's a dispute about something, well, I can take them to court and I can use the support of a legal system behind it to make sure that that money has the value that I expected it to have. And Bitcoin kind of has this weird, almost inherent conflict in it, that because it's sort of decentralized, I wonder if that decentralization isn't, well, it's also its greatest strength, also its greatest flaw.
How do you mean? Because it doesn't have the backing of a big system? And if so, I guess the argument is that it might not need it, right? If it's a peer-to-peer system and we don't have to trust in a government to operate correctly, because I feel like the trust that I have, and look, I'm not like a Bitcoin pusher or cheerleader. I think it's very interesting. I think it's been successful. But I have no clue where it's going to be in a couple of years. So for anybody watching this, like, I'm kind of neutral on it. I like it. I use it. I trade it.
Yeah, I totally
but
agree.
I'm not a blind cheerleader. Like, I agree. I see some pretty big flaws, and I hope they get worked out over time. But it is interesting, and I'm so happy to have somebody like you, Cullen, that can really look at this from a pragmatic standpoint, right? Look at the pros and cons, and really just not from an emotional or a politically biased perspective. So thank you for that input on there. Is there anything that you've seen in the economy that's changed recently that you think people should be aware of that might have some big implications over the next few months or years?
You know, the biggest thing, at least in the last few months, is I think the growing impact of China. I think that it's kind of almost disconcerting to some degree, the extent to which China is almost certainly going to become the largest economy by probably several magnitudes at some point in the course of our lifetimes. And so what's a little disconcerting for me is that what you have in China is this very, overly centralized system that is, you have the government involved in almost a ludicrous way. And this is an economy that by necessity, just by sheer population size, is going to become increasingly important in all of our lives. I mean, all of us are going to increasingly experience some ramification from the growth of China over the next 30 to 40 years as they just become a monstrous economy relative to everything else. And I wonder how that's all going to develop in terms of its impact on the rest of us, because this is not a capitalist system. This is not a market-based system. And you see this in the recent market collapse over there, where the government is they're trying to actively support stock prices by banning stock sales and banning
and by arresting short sellers. That's insane to me. Like, do they not want true price discovery?
Yeah, I mean, they're really trying to put a floor under the stock market over there, and in a way that just seems, I mean, just totally bonkers. And so it's crazy to think that this country that is going to become so sort of central to the global economy in the next 30 to 40 years is something that is really very, very different from the US-centric economy that we've all kind of grown up in over the last 30, 40 years. And so I don't know, there's parts of it that are exciting because the growth is so fantastic, and it's a lot of, I mean, we're pulling more people out of poverty in emerging markets every day than at any point in human history. So it's kind of a cool time to be alive, but at the same time, it's sort of a scary time to be alive because all of this stuff is becoming so interconnected in a way that is really going to create almost an interdependence and a reliance on governments and countries and policies that none of us really understand that well, and none of us really know how they're going to play out.
I agree. I think the whole China and just the way that the global economy is changing is definitely going to shake things up. And like you said, the good news is it's going to create huge opportunity, but it's also going to, with that probably come a bunch of problems. So thanks for your perspective on that. I wanted to ask you this for a while. What's the best advice that you've ever received about investing or the markets or trading? If you can think of something off the top of your head, just like a piece of advice that's kind of always stuck with you that maybe has guided your investment decisions or at least your philosophy about investing over the years.
I would say that if I had to pick one piece of advice that I think is just really crucial, is that avoid all of the noise that's out there about trying to beat certain benchmarks and focusing on other people's goals, really, because ultimately we're all unique. We all have our own needs and necessities, and we have at a personal level, we all have our own personal goals. We have our personal benchmark in essence. And that personal benchmark, it's not the S&P 500. It's not the treasury bond market. It's not what Morningstar or Bloomberg says it is. It's something that's very personal. And if you can go into this by understanding what your personal goals are and kind of ignoring a lot of the noise, I think that ultimately you have a much higher probability of achieving success, because you end up really focusing on what your personal needs are and not necessarily the needs of other people or the needs of the market or what some silly benchmark is.
I think that's really great advice. And it kind of goes hand in hand, I think, with the idea of not chasing the market. If you're obsessed with, trying to, like you said, beat the S&P, you're probably more likely to freak out in years like 2008 and sell at the bottom, and maybe more likely to be afraid to invest in 2009 and 10 when that was probably one of the best buying opportunities in recent history.
Yeah. Or worse, years like the late 90s is when people, you hear about this, career risk in money management is one of the main drivers of this, that money managers chase the market return, which is really messed up, because what that oftentimes does is it results in the asset manager, by trying to chase a benchmark just because maybe they're losing to it, halfway through the year or whatever, they end up chasing some silly benchmark. And what they actually end up doing is they end up taking risks in ways that actually separates their perception of risk from their underlying client's perception of risk. And what they're really doing is they're trying to overcome their career risk is all they're doing, which is no investor cares about the asset manager's career risk. But you have all these sort of conflicts inside of the idea of benchmarking and trying to beat the market that results in really an excessive amount of risk taking more often than not than a lot of people should be taking.
Yeah, it's kind of, and I'm not like really good at the long-term outlook. My focus is usually day trading. And I guess to kind of mirror that for day traders, it's kind of like if you set an aggressive goal that's above what the opportunity gives you, you're going to actually end up probably underperforming what you could if you just stuck to your plan. Is that kind of what you're saying?
Yeah, you have to be really realistic about the potential returns. I mean, for instance, if you're just a saver, you're someone who's sort of just involved in, allocating through 401ks and IRAs and stuff like that, and really taking a long-term view. I mean, the nice thing about taking a sort of aggregate macro view is that you can put all this stuff in perspective. I mean, the aggregate of outstanding financial assets right now is roughly a 45-55 stock bond portfolio. If you look at the total outstanding assets of the global financial markets, and that portfolio in the aggregate means that that's the return, will generate the return from all of those outstanding financial assets over a long period of time on an annual basis. And that portfolio right now, I mean, you look at it, interest rates at 2-3%, the stock market, what's it going to generate? I don't know. Let's just throw a number out there, 10% maybe, something like that. Maybe that's on the high end. In the aggregate, when you look at that portfolio, that 45-55, that gets you to what? Something like probably a 6 to 7% return in aggregate, maybe. Mm-hmm. And that number is the top line number. This is the pre-tax and pre-fee return that the aggregate of all investors are going to generate on an annual basis, in all likelihood over the long term. And so you have to be really realistic. A lot of people go into the financial markets thinking, oh, I'm going to get crazy rich doing this, or I'm going to be able to copy Warren Buffett. And there will be people that do that inevitably. But in the aggregate, the vast majority of people are going to generate actually that post-tax and post-fee return of the aggregates, which is, it ends up generally for most people being something like 3, 4, 5%, which really, that really brings some realistic perspective to the long-term figures.
Absolutely. And I know in the book you talk about real returns. And I just want to get your quick opinion on real estate. Is it a great investment or not? So it depends on so many elements. I mean, there's actually a great buy rent calculator on the New York Times has a new one, and Khan Academy has a great one on their website, a really nice Excel file. And it's kind of a personal decision, and there's always a degree of timing involved in buying real estate, because ultimately it's based on really what the price appreciation is going to be. But over the course of a really long period, real estate, like commodities, tends to generate a return that is just marginally above the rate of inflation. And the main reason for real estate's fairly meager long-term returns is that the purchase of real estate tends to correlate very highly with wages, because buying a house is generally such a large expense, and the mortgage is generally tied directly to someone's income, that those things all tend to correlate fairly highly together. And wages tend to correlate pretty highly with inflation over the long term. So what we find is that ultimately the price that people can afford to pay for real estate over the course of very long periods of time tends to correlate very highly with a small premium over the rate of inflation. So it's not the way I think about this. And again, it's kind of nice going back to sort of an operational view. If you think of what stocks do, corporate equities are basically, they are an income stream that gives you access to corporate profits. Okay. So, and the way that a corporation makes a profit is basically by taking
the cost of inflation and charging everyone else a markup over the cost of inflation. So the cost of doing business, and then they charge a markup.
All right. So we've talked about some really good stuff, Bitcoin, gold, the Fed. Just a couple more questions and then I'll let you go. Other than your own book, obviously, Pragmatic Capitalist, what would you recommend? What book would you recommend that people read about the markets or finance or psychology, or do you have anything that you just really enjoy?
Oh man, there's so many good ones. I mean, my default is always the Warren Buffett shareholder letters. There's been a couple of books that have packaged all of them together. You can actually get them for free online. And I mean, God, I'll never forget the first few years I was actually, I guess it was before I was actually directly involved in the financial services industry. I just spent hours and hours going through all of the different shareholder letters, and everything that Buffett has written is just so insightful. And there's a lot of just big picture stuff. There's a lot of micro picture stuff. There's a lot of just sort of life lessons involved in a lot of it that you just don't find in any other sort of cookie cutter text. And so if I had to recommend one thing, it would definitely be the Buffett shareholder letters.
Nice. Thanks for that. Yeah, I've never read them actually, but I've heard from a few people that they're very insightful. So
yeah, they're so good. Especially you would love his early partnership years are really cool, just because like you get a really good sense of what he was going through when he was building what was Buffett Partners and then ultimately what became Berkshire Hathaway.
Nice. Awesome, man. Well, so thanks for all your input on everything. How can people get in touch with you?
So you can reach me through pragcap.com. It's Pragmatic Capitalism. I have you can always email me, Cullen Roche at orcamgroup.com, or I have a Ask Me Anything section on the PragCap website that people love, where you can sort of just bounce ideas around if you want, or you can ask me something specifically. I generally get to questions usually at least every other day or so. So I love helping people out. It's a great sort of community, everyone that's involved in finance and trading and investing, because so many people not only have opinions, but so many people are willing to provide you with a lot of educational help about everything. And it's over the years, I've gotten so much help from so many random people who I've either emailed and reached out to, or just, colleagues that are involved in the industry. And it's, a great sort of educational sphere. And this is a topic that is so important in so many levels of our lives, just money, finance, economics. It's all intertwined in our personal lives, in politics, in really everything that we do. And I think that having a thirst for knowledge about this is ultimately a really important thing in understanding how a lot of this stuff works at a sort of operational level, and avoiding all of those biases. It's just going to make you a smarter consumer of financial media, and it'll make you really a smarter investor over the course of your lifetime.
Yeah, I completely agree. And again, thank you for sharing all your knowledge today. I know that it doesn't matter if you're an investor, a trader, if you're a Bitcoin developer, I think everybody can benefit from Cullen's book. It's Pragmatic Capitalism, and I highly recommend it. We'll link up the book and your blog. And again, Cullen, thank you so much for sharing all your knowledge today.
Yeah, thanks, Chris. And there's a ton of free, if you go on my website on pragcap.com, there is a ton of free content on there. Actually, if you link through, I have a page called Understanding Money on my corporate website, on the Orcam Group website, which is sort of just, it's basically really just a database of my favorite links, basically, is really what it is. And it's just all educational stuff. So I'd recommend that people, the internet is an amazing thing. There's so much free stuff out there. You have to be careful about a lot of it, because a lot of it's, like we talked about earlier, just people selling stuff. But it's a huge educational resource. So I hope people find it helpful.
Yeah, I know whenever I started diving into it, I was like, okay, this guy is actually for real. He's not just selling gold or, selling some kind of political bias. So highly recommend the blog, highly recommend the book. Guys, go check it out. Cullen, thank you again so much, and I look forward to talking to you real soon.
Thanks for having me, Chris. I really enjoyed it.